The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and welcome to the Wyoming Women's Business Center's 2018 webinar series. Today's presentation is Credit Card Smarts, Understanding and Managing Credit for Your Small Businesses. My name is Waldo Smith. I am the Microloan Director here at the WWBC, and I will be your moderator today. You'll notice the GoToWebinar control panel on the right side of your screen. You may use the question or chat box to submit questions during the presentation, and I will be monitoring those and passing them on to our presenter, who is Debbie Gorski. She is our Executive Director here at the WWBC. She started as Director on October 1st of 2014. Previously, she was the Social Media Community Manager for the Wyoming Entrepreneur for 6 years, and the Associate State Director for the Wyoming Entrepreneur for 8 years prior to that. She worked for the University of Wyoming Cooperative Extension Service in Campbell County, and then for the Sensible Nutrition Program for 6 years. Debbie graduated from UW with an MS in Family and Consumer Sciences. This webinar is being recorded and will be available to you on our YouTube channel. Just go to youtube.com and type in Wyoming Women's Business Center, and make sure you subscribe and check out our other webinars as well. You can also visit our website at wyomingwomen.org or look for us on Facebook. Immediately following the presentation, a survey will launch as you exit. Please complete this survey as it provides valuable information to us and our funding partners. All participants are muted in order to minimize background noise. So if you have a question, please use, again, the question or chat box on your GoToMeeting control panel, and I will pass them on. And with that, I will turn the presentation over to Debbie.
Thank you, Waldo, and good afternoon, everybody. With all of our webinars, we usually do a quick intro on our services that we offer, and I will do this quickly because I know we do this every time. So if you have any questions about anything that we do, at the very end of this presentation, there are emails and phone numbers for myself and for Waldo and Jonathan. We also have Christine Langley, who's also in attendance today, and we can also provide her email as well. So just know you can always get more information from us. I'm hoping everybody can see my screen. If you can't, you can write in the chat box to Waldo. Keep in mind, if this is the first time you've been on on a webinar, sometimes if you navigate away from the GoToMeeting, go somewhere else on the internet, it won't log you off, but it takes you away from the GoToWebinar. And if you look down at the bottom of your screen, you'll see like a blue daisy-like picture. If you click on that, it will bring you right back to the presentation. So just a reminder for those of you who don't have much experience with webinars. So today what I'm going to be talking about, as Waldo said, Credit Card Smarts. I'm going to go through our services quickly, and what we're going to address today is credit cards and financing and business. We see this a lot, and I'll go into more depth in that. A business credit card considerations, managing your credit card debt, and then finally credit card tips and suggestions. And I will allow, or try to give you about at least 5 minutes because there's a lot of information here. So our mission, we're here to support small businesses and startups. We like to see people be successful. We have counselors to help you through this. We are a nonprofit organization. We're a 501c3 nonprofit. We attained that status in 2006. I'm not going to read all these slides. Some of the stuff you can go to our YouTube channel to read more in depth if you need to. Our main office is here in Laramie, and we do have a satellite office on the Wind River Indian Reservation. We provide primarily counseling, business counseling, and training programs. And we do have a roundtable here in Laramie. We have roundtables in other areas, and I do have a slide on that. We provide microloans and match savings account. While Waldo Smith is our microloan director, he would be the person you would contact for more information. So our roundtables around the state that have monthly meetings, you can see here is Cheyenne, Torrington, Jackson, Laramie, and you can see we do online. We also have available online trainings, and all of our webinars are recorded. More explanation on our microloan program up to $50,000. Our application and more details about that is on our website, wyomingwomen.org. Okay, so I'm going to go ahead and get started here. I realize that was quick, but I know you hear that message a lot. So what I want to just kind of say very quickly here is, I'm sorry, sometimes when I read, if there's any messages, I get a little distracted. As I was researching this topic about credit cards, there is a ton of information, and so trying to squeeze all this in an hour makes it a little difficult. Probably this presentation can lend itself to about more in-depth topics on 4 or 5 topics mentioned in here. So this is a quick overview. I do have some links, and if you can't access the links to the YouTube video, you can at least cut and paste to go to some of those links, because I think you'll find them valuable. So I just want, and also if I miss any, I want this to be interactive. Everybody has their own credit card experiences and what's worked for you and what hasn't. And if you would like to share information, please indicate that in the chat. Excuse me. So I have some quick stats here, and there's not just one set of quick stats. There's several organizations, and they vary a little bit, but this is one that I am using right now, and you can read that. I think the thing that interested me the most as I was researching is that Wyoming ranks second highest of average credit card debt. And I believe that was through credit.org. So the average credit card debt in Wyoming is $8,979. And I apologize, I can't remember who was the top, but the average credit card debt for that state was a little over $9,000. And I just found that very interesting that Wyoming ranked second in that. So let's just get to the highlight of this is, should you be using credit cards to finance your business? I'm going to talk mainly about pros and cons. Sorry, I got a frog in my throat here. So really it's your decision, but we do see with most of our clients, everybody does have some credit card issues, and you should take a very, very good look at if you should do this or not. So it is ultimately your decision. A lot of our clients have used credit cards to fund some aspect of business need. But what I'm hoping to do today is just really get you to think about comparing cards and to really read all the fine details before you make that decision. So credit cards aren't all bad. It's basically, it's one way, and it's the most important way to develop a good business credit and personal credit, obviously. Don't need collateral to do this. But you do need to understand your credit score, and if you have never looked at your credit report, I have a couple links at the end of this presentation. If you're looking at taking out a business credit card, the credit card vendors do look at a higher credit score, and you can see in this slide it averages about 620 to 660 plus to get a business credit card, and we'll talk more about that later. One thing with a credit card, if you're doing it online, it's very easy to track your expenses. Of course, you can do it through your paper statement, but some credit card companies make it very easy how you're tracking your expenses. So what would be the bad, why would you not want to use this credit card? Just keep in mind, if you go out of business, personally, you're still going to be held responsible for the credit card charges, and we're going to talk more about, and not a lot of detail. I do have a link about the Credit Card Act and how that, and you can read more about how the difference is between a business credit card and a personal credit card. If you're using a credit card, if you're using your credit cards, I should say, to charge both personal and business expense, that's a no-no. You could open up a personal card just for business expenses or take out a business card. And I don't know if Waldo and Christine can always chime in if they have other ideas, but this is a no-no. It's just like your bank account when you're writing checks. You should never commingle personal and business expenses. Credit card limits are generally low, so if you're looking to take out a loan or a debt on your credit card for your business, even a business card, generally those limits do not exceed $50,000. So if you need more than $50,000, you're looking at other ways to achieve that. Can be expensive in the long term, especially if you don't pay those loans off quickly enough. You could get yourself in real trouble, and we'll talk more about that later. And taking on too much debt. We've seen clients with several credit cards with high balances on all of them. That affects your credit score, and it also makes it very difficult for you to pay those off in a timely manner. Any questions or anything to share so far? And Waldo, I'll just kind of wait for you if you do see a question, because I don't always catch the question icon when that comes.
We don't have any at present, but again, if you have a question, you can type it in the chat or question box on your GoToWebinar control panel.
So what are some business credit card considerations? Obviously, if you're applying for a business credit card, they are going to pull your personal credit reports because they look at a small business is owned by the owner, obviously, so that's how they make their decisions. The small business cards are not necessarily regulated, and they're not actually regulated in the same way as the 2009 Credit Card Accountability, Responsibility, and Disclosure Act. That act really protects consumers, and I do have a link on one of my pages for you to go to really read that. I read through that. It's quite lengthy, and I think everybody should understand what's in there, because there are things in there to protect you as a consumer if a credit card company does something that goes against this Credit Card Act, and you could receive a judgment and the payment back for anything that a credit card company has done that they should not have done. So I would encourage everybody to read that. Actually, and we're going to talk more about carefully consider terms, because I'm going to talk about the Schumer Box, if you've never heard of the Schumer Box on your credit card disclosures. But you should always be looking for low interest, and if you qualify for a 0% annual percentage rate, there's many issues to consider, and I have a whole slide on that. Always check the fine print. I know that's easy to do. You look at the terms, and especially when you first get a brand new credit card, you get all those paper within the envelope, and it's got all the terms and everything on it. And when I was younger, I hate to admit this, I'd throw it away, or I'd put it in the file, but I wouldn't read it necessarily. So you need to check the fine print and understand the credit card terms. So this is, if you're going to take out a business credit card, really make sure you read through everything and understand everything very clearly before you accept that card. So let's just dive into 0% interest. Is it really free money? Well, no, not exactly. And you want to really read through those promotions and to see what that term is, because usually what they'll splash in large letters that you may qualify for 0% interest for so many months. Now, one thing, credit card companies buy names to send these credit card offers. It doesn't mean that you're going to automatically qualify and approved. You still will fill out the information. They're still going to they're going to pull your credit report. They're going to do all their due diligence, and then they'll make a decision if you are approved. So just because you get the offer, and I'm sure you all know this, does not mean you're approved. The other thing, the 0% interest may be very limited to certain situations. Is it just for new purchases? Is it for a transfer balance? There's lots of different situations. So I'm really gonna encourage you to read the Schumer Box, and I will talk about that in the next slide if you've never heard about the Schumer Box. You must pay the monthly minimum payment. So say you take out that 0% on the credit card. Just because you got the free money doesn't mean you don't have to make a payment. You have to make the monthly minimum payment. We always encourage you to make more than that. So how much should you be making? So say you got an offer, it's for 0% interest, and it's 0% off in 15 months. Well, just take the total amount that you're charging on the card, divide it by those 15 months, and in this instance, you would have to pay $400 a month to pay it off in 15 months and have that 0% interest. If you jump down to the bottom, be sure you understand what the payoff deadline is, not the credit card's bill's due date. So when you get your statement, either online or in a credit card statement, it always says, okay, you owe this by this date. That is not the same date as the payoff deadline. So for instance, maybe in the small details in the Schumer Box, it says this offer is good, 0% interest, 15 months for January 5th. I'm just using that as an arbitrary date. But your credit card bill due date may be January 22nd. If you make that payment on January 22nd, you've already passed the payoff deadline. And that 0% interest, depending on the details, you could end up owing interest for the whole entire 15 months. It's just really important to understand what the credit card terms are. So just be very aware the payoff deadline is not necessarily, or does it coincide with your credit card bill's due date. And we'll talk more about some smart strategies to make sure you don't miss that date. Also, there's a lot of people use taking a special offer to transfer an old debt. Nothing wrong with that. Just make sure you understand the terms and the cost, because the balance transfer fee, that 0% may only actually be available for 60 days. And after that, you'll pay a 3% fee on the balance that's still on the credit card. So just make sure you look at all those different terms. Here is some different. So if you still want to take out a business credit card or have a business credit card account, I found these 3 sites from creditcards.com, and actually I kind of like this first one, and this is a screenshot of creditcards.com, so you can see all the different topics in here. So they even have 0% APR on here as one of those, and what you do is you just click on that. It'll show you all the credit card companies who are offering a 0% interest, and it will show you very quickly the terms, and then you can compare all those terms and how those relate to other credit card companies. So it's pretty interesting. So you can see there's all these different ways to compare credit cards. The other thing I thought was interesting is on the bottom row there, you've got a list for top credit cards. These are the best credit cards. So you would have to have a high FICO score to receive one of those. You've got, if you want to get rewards, that can be very good for some businesses. If you travel a lot or have get rewards to buy items, products, or get a cash back reward. So the other thing I thought was interesting, so you see this fair credit. So say your credit score is fair, and I'm trying to think, it's kind of arbitrary by different companies and credit reporting agencies and what that, how that varies. But if you have a credit score in about the 600s, it will show you what credit card companies, what percent interest and terms they would offer you. And then if you have a poor credit poor credit score, you can see what's available to you. But I'm sure you understand that that's probably going to be a much higher interest rate. You're just not going to get a very good terms to even look at using those credit cards for a business expenses. But I thought it was interesting. You can go through there and see which credit card companies offer cards in those categories. So it's kind of fun to go. Well, I'm saying it was fun. It was interesting for me to go through that. Okay, so the Schumer Box actually is a term that it was legislation that was passed by Charlie Schumer, who is a congressman in New York. So that's where it gets its name, the Schumer. And the legislation, basically what it does, provides easy to read, easy to understand terms for credit cards. So this is mandated. You'll see it on offers in all that paperwork that you get, or the fine print is a box. So it's a black box, and it actually is kind of a lengthy box. I was going to put a screenshot on here, but I just Google Schumer Box and it'll show you an example of what that looks like. But as you can see below that, the key information, the Schumer Box is to make it easy for you to read and compare. So it will list the annual percentage rate, variable rate, grace period, and all these things. This has to be standardized, so it makes it easy for you to compare different credit card offers. And so it is standard and mandated to be available for all credit card companies to provide to consumers. You want to pay especially close attention to the promotions that you're getting and understanding how that would compare. I'm trying to think, but anyway, this source for this information, if you want to go to credit.com, it has a link so that you can get more explanation on the Schumer Box and to look at what the example would look like. You probably have all seen it and didn't realize that's what they call it, but this is to make it easy, simple to read, and just simplifies the credit card terms. Probably everybody's very well aware of the FICO score generally, and I'm saying generally because there is a little bit of difference between different vendors. Generally, the FICO score ranges from 300 to 850. So if you're one of those 1% that has an 800 score, then you are in an elite group. So you can pat yourself on the back. And as you can see through the rest of these, you can see, and some vendors, bankers and such will look at even 740 and plus is exceptional. So this just kind of gives you a quick guideline on if you know what your credit score is, and it gives you a good guideline if it's a poor credit score, all the way if it's an exceptional score. So I just want to talk quickly though. Well, first of all, and this is not on this table, but FICO is calculated approximately, because I guess they don't give out exactly how they do it, but roughly the FICO score is calculated approximately 35% is based on your payment history. Are you making payments on time, or are you late, and how often you're late? 30% is on the amount owed. So if you have one credit card or more, and even throughout your history, it will show how much you've owed, if it's paid off, etc. 15% is calculated roughly for your length of your credit history. So if you've ever pulled off a credit report, like for me, I believe I've been having a credit card for 40 years. And it was pretty long. I think it was around 50 pages. That's a lot of information. It shows everything I've done with credit cards and all sorts of different credit loans and mortgages and everything for 40 years. 10% of your score is calculated from new credit. Have you taken out a new credit card, and how many? And 10% is calculated for the types of credit used. So basically, the most important factor, as you can see from what I've told you, payment history is the most important factor on your credit score. Second most important, and a little more complicated, is the total credit you have available. Now, this is known as your utilization ratio. And lenders believe that borrowers who are close to maxing out their credit are more likely to miss payments. The third factor then, the length of history, is determined by the average age of your account. So obviously the longer period you've had a credit history, and if that's positive, that will count for you. If you have a very short credit history, then of course it's going to count against you. Now, one interesting thing that I have as an example, my sister and her husband have always paid cash for everything, vehicles, furniture purchases, everything. They don't have a house because they lived on a ranch. But anyway, when they finally decided they wanted to buy a home, they were told that they were turned down because they don't have a credit history. They've never had a credit card. And believe it or not, she called me to ask me how to do that, how to choose. And maybe a lot of people are in that situation. But anyway, this was a new experience for them. They were very proud of not using credit, and I think that is something to be proud of, but it can count against you because you don't have a credit history.
There's another interesting point, Debbie. If you pay off a credit card, you need to contact the company and cancel it with them. You don't just cut the card up and throw it away. If you don't cancel it with the credit card company, it still shows on your credit report as available credit and can affect your credit score and your ability to get a loan at the bank.
Very good point, yes. The other two smaller factors on how FICO is calculated is how often you've opened new accounts. So opening a bunch at one time will definitely hurt your score. And I will tell you from my experience, lenders don't like to see a lot of store cards. So what I mean by store cards, I'm sure you already know this, is like Macy's or Kohl's or whatever, because those aren't generally looked upon as positive. So they don't really like to see that. And if you've opened up a bunch, they look at that and that will hurt your score. And so finally, the types of credit used. Lenders like to see that you can manage different kinds of accounts responsibly. So not just credit cards. If you have a mortgage, a student loan, car loan, things like that. So they want to see a mix. And if you've been responsible with those, it just shows that you can be responsible in a lot of different situations. So this table that you see in front of you, these are just some examples of what can happen, and I'm sure you all have your own horror stories. So if you're late, your credit score will go down significantly. If you've had trouble managing your credit cards and you go to a credit consolidation company and they help you make a debt settlement, you can even do a debt settlement yourself. That will significantly impact your credit score. And I think all of you would understand the bankruptcy, either Chapter 7 or 13, definitely affects it hugely and can be on your credit report for up to 10 years. So those bankruptcies should always be looked at very, very carefully before you make that decision. I guess the final thought on this, there is no quick fix to raise that credit score at any given time. And so you just want to use that wisely all the time. I don't know if anyone else has anything on that. So managing credit card debt, and I think a lot of these are obvious. Don't utilize the whole maximum amount of your credit. The guideline is no more than 30% of your credit limit. So say you have a credit limit of $1,000, 30% of that is $300. So, and that's for each card. Now, if you have lots of cards, just think about how much debt that's going to be And we're going to talk more about debt to income ratios in a little bit. If you have a lot of credit cards and you feel you're in trouble, there's some different strategies you can take. Now, the reason I list these is because not all of these would work for people. We all have different habits. We know what works for us that may not work for somebody else. So if you have several credit cards and you're in trouble because you maxed them out, oh, sorry, that's my office phone. Sorry about that. For some people, paying off the balance with the highest and annual percentage rate is the best, and pay those off first. So if you've got a credit card with a 20% interest rate, maybe that works for you to pay that off first and then just keep going down the line, the next second highest APR and so forth. Paying off the card with the lowest balance first. Now that's what I utilized after I was divorced. I had several credit cards that I had shared jointly with my ex. And I like to see successes, and I guess I got more inspired that way. So I listed all my credit cards, what the balance was, and I did put all the terms and everything, the percentage rate and everything. But I found as I paid out the lowest balance first, and then that really showed a success. So what I did is once I paid that off, I took that payment that I was making, so if that lowest balance was a payment of $50, I applied that $50 payment to the next lowest balance. And actually it did take a little time, but after a couple of years I got them all paid off. Maybe you're somebody who likes to consolidate all of the debt into one card or one loan because you don't want to have 6 or 8 different payments every month. Plus it gets kind of hard if you're not setting up automatic payments. So maybe that works best for you to just see one big picture and you're just making a payment to pay them all off. Get organized. It's a really good one. Make sure you have all of your credit card paperwork and just write down whatever works for you. If you do an Excel spreadsheet, put it all on paper. All of your loans, all of your debt, put it out there so you can see the whole picture. And I can tell you that's really scary if you're in that situation. But once you see the whole picture, get past that hurdle, then you can start making strategies to pay off that debt. Make those payments on time. You want a good credit history, and just learn from your mistakes. Once you clean it up, you got to make sure you don't fall back into the same habits. And if you had 8 credit cards and you paid them off, as Waldo said, once those are paid off, call that creditor and close those accounts. It's really difficult in today's day not to at least have a credit card. So if you travel a lot or something, you almost have to have a credit card, or I know I do. So it's really difficult. So if you can limit yourself to 1, I would say no more than 3. That would be the best situation.
Debbie, one of the participants asked, what banks in Wyoming do manual underwriting for real estate mortgages for people who have a 0 FICO score, such as your sister? I don't know specifically of any that do, but do you or Christine know of any that might do hand underwriting?
I don't. I would have to research. Christine, do you have any ideas?
Yeah, I was going to say same here. I'd have to look into that.
I'm not sure I heard that. Can you repeat that?
She said she didn't know of any. She would have to research. So, Jody, in answer to your question, why don't we see if we can check that out for you? And I have your email. I'll try to follow up with an answer for you after the presentation later today or tomorrow.
Thank you, Waldo. I appreciate that. So now I kind of want to talk about, this is a quick way to look at how much debt you can manage in your business. And actually this is true personally too. So I'm going to talk about debt to equity ratio first, and then I'm going to talk debt to income ratio second. And debt to equity ratio I look at this as if you're already an established business, this may be easy for you to do it. For startups and people who aren't who don't do a lot of financials, this one might be a little more complicated. But for established businesses, use your balance sheet, and you should be pulling those balance sheets off on a regular basis. It's up to you how often you need to do that. You can always call one of our counselors and we can talk more about that. for your particular situation. So your balance sheet tracks your assets, your liabilities, and equities. So that's why it makes it easy. And if you've been in business for a year or longer, it'll be easy to find this information. And obviously, the lower the ratio, the more stable your business. So that's one way. So for businesses, if you're established and you have a few years, you can look at that debt to equity ratio. If you have trouble determining if it's a good score or not, make sure you can call us. And Waldo, this is more your area. Since you're our microloan director, you deal with the debt to equity ratio all the time. Do you have any words of wisdom on this?
It's just a good measurement tool to see how you're doing. And like Debbie said, the lower the ratio, the better. The more you are capable to withstand something major coming up that you have to suddenly borrow money for, something unexpected. If you've got a high ratio, your ability to borrow is limited if something major should happen.
So if you are not in business, and you can do this personally, or if you're a startup, a debt to income ratio may be a better way to look at where you're at. So I just have a very simple example here. I mean, this is very simplified. So if you have all of your monthly debt payments, and this can be mortgage loan, credit card loans, whatever, if that equals $2,000 monthly, you're making payments on that, then divide that by your monthly income, and this is your gross monthly income, and in this case it's $6,000. When you divide that out, this equals 33%, and that's not a bad ratio. What I did find, and I don't know, Waldo or Christine may have a thought on this, what I found is that most lenders look at 43% as kind of the upper level of ratio you should have. So if you have higher than 43%, that would be counted against you for getting a loan or anything. So that's kind of just a good model, I think, to say, okay, so as you're managing debt, what would that look like? And it's, everybody's situation is a little bit different, and what am I trying to say, for your business, where you're at in your cycle of being in business. Maybe you're expanding, adding employees, whatever the situation is, that ratio is going to look different. Every day is going to be, it's going to change, but you can at least get a very good idea of what that looks like. So what's your ratio, and how does that work, and how you can still be able to pay loan, because lenders will look at that. So that's a standard. Some lenders will go as high as 50% ratio, but that's what I found is what most of them look at.
If you're looking at taking out a home mortgage, they will also include your real estate taxes and your insurance costs part of the monthly debt payments. So that's figured into that ratio.
So that's something that you can do very simply. It'd be very easy for you to calculate to understand what your ratio is, your debt to income. And again, the smaller the better, just like the debt to equity ratio. So the smaller the better. So here's some, as we're winding down here, I can't believe, seems like it always goes fast here. Some basic credit card smarts. And obviously, and I think everybody can understand that the greatest advantage to having a credit card is the ability to build your credit, as from that example of my sister that I gave you. Choosing the right card for you. There are so many cards out there. I'm on somebody's list, and I need to get off that list because I get, it's just a constant stream. And of course, they tag me, and then they tag my husband, so we get 2 of everything every month, and I'm sure you're all experiencing the same thing. So what would be the right card for you? Well, only you can really determine that by comparing and determining what your own situation is. Do you need a credit card for balance transfers to get a lower interest rate from an old debt? Do you need one for very low interest for a very short period of time? maybe you need to buy equipment or whatever. Do you want a rewards card? Now, sometimes those rewards are built into your credit card somewhere in your fee, so make sure you look at the terms very carefully. Do you travel a lot? So maybe you want something with airline miles or maybe just the cash back. So what's the right credit card for you? And I've said some of these things several times, but I guess I decided it bared repeating on some of these. Always read the fine print. And it seems like, I mean, I'm older, so I have to wear reading glasses, and it seems like those terms and everything is printed in such a small font. It's a little irritating, but anyway, I'm sure that if you, and I didn't look in the Credit Card Act, but maybe they have to be able to provide the terms in a much larger font. I don't know, but anyway, make sure you check your credit card statements every month. And I put on the very bottom, you know, a lot of people don't want all the paper, and I understand that, but, and I think I'm guilty of this. I get my statements electronically, but I think it's easy to overlook those. So you'll get a notice in your email, if that's how it's set up, that your statement is ready. But I think for a lot of us, we look at it quickly and then we just kind of forget about it. So whether it's a paper copy or an electronic, make sure you view it every month for inaccuracies to make sure that there's not charges on there that's not yours and so forth. If you've never pulled off a credit report, and I have some links here in just a minute, now's a good time to do that. And if you're going to take out a loan, if you need a loan or you're doing a credit card application, I would check your credit card report just so you know what's in there. There may be things in there you're not aware of, and you need to dispute those, or you need to address it quickly. Obviously, pay your balance every month. A lot of these are kind of the same things. The other really good tip is set up your payments automatically so that you don't forget. If you're like me and you travel a lot, sometimes in the past I forgot, and I'd risk, I mean, you can be late by an hour, and that's going to have consequences. So if you're one of those people like me who can forget, tendency to forget because you're traveling, or I get distracted, you may want to set up automatic payments. It's a great way to just not have to worry about it. Okay, here's these links I keep talking about. So if you're looking, you are allowed one free credit report yearly. There's a couple here. There's a few out there actually, and I believe a lot of banks do offer that once a year for free. So there's Credit Sesame or Credit Karma. There used to be some cute commercials on television about Credit Karma, and that's the one I'm the most familiar with. But anyway, those are two that you can look at. If you want to see what the true cost of having a balance on your credit card would be if you only make the minimum payment, this would be the link for you, and it's through creditcards.com, calculators minimum payment. Here's the next link for what I keep talking about, the Credit Card Act of 2009. Like I said, I would ask everybody to look at that and understand it. The last one is if you are in credit card, severe issues with your credit card and you have too many and you've got them maxed out, and I've got another slide on how to know that you're in trouble. There is a consumer credit counseling service of Northern Colorado and Southeast Wyoming. It's called Green Path. They've merged. I don't know when they merged. But anyway, what they will do, and this is free, and they have counseling, and you're basically going to bare your soul. I used to be on the board of one that was in northern Wyoming, and you will disclose all of your debt. And basically what they're going, and if you continue with them, basically what they will do is they will gather up your credit cards, they'll consolidate the debt so that you only have to make one payment. They will negotiate with the credit card lenders or whatever other debt you may have, maybe medical or whatever, and they will negotiate a payment that they think, because they're going to assess ahead of time what they think you can pay. You will make one payment. They will distribute it to all of your creditors, but they will destroy your credit cards, and they're going to put you on a diet. It's like a severe diet. But if you're experiencing severe issues with debt, then this may be something you want to look at, or at least get some counseling to see what they recommend. Okay, so alarm bells. If any of these things down below, I'm not going to read through them all, are ringing, then you're in trouble. And so I would take this very seriously. If your credit cards are all maxed out, that's a serious issue. If you can only make the monthly payments and you can't add extra, that's an issue. Let's see some other ones. If you ever have to pay late, if you are opening a new credit card account to pay off another credit card, just to make the payments, that is going to be the ultimate sign that you are in trouble and that you have got to do something now. So if you're already in trouble, call that Consumer Credit Counseling Service if you're living in Wyoming, the link that I just had, and you can Google it too to get that. But there are some other things you can start doing now. On this top link here, this is the National Foundation for ConsumerCredit.org, and they've got a lot of wonderful tools and worksheets you can work through, and they also can link you up with a counselor. So they're free, and I would suggest you use those. But start thinking about your expenses and separating out these expenses by needs and by wants. And this applies to personal, to business, whatever. You may have to start really cutting back. Employees are almost always needs, but maybe people can double up or something. So a lot of businesses will sometimes cut positions. If you're in business, you need to really look at what you're doing. Are you eating out too much? Are you traveling too much? Personally, can you cut your cell phone expenses back? Maybe it's cutting the cable TV. There's a lot of things you can do. And the other thing I would say is don't add more debt. Don't apply for more cards. One thing we are seeing with a few of our clients, and this is always very distressing to me, is there's a lot of, and there's several predatory lenders out there that would love to give you a loan and make it very easy. You can get the money very quickly, but that comes at a very high cost. And I've heard of upwards of almost 300% interest, and in many cases, they are doing automatic payments right out of your checking account every single day. Please don't do those. If you have any questions on those, please give us a call. Any other potential fixes from Waldo, Christine, or anyone on the call?
I don't believe so. I think you've covered most of the best ones.
So thank you. So if you want to look at other financing options, these are just a few that I came up with. I'm sure there's lots. Always family and friends, I think, are an option to borrow, but that makes it tricky because just because you borrow from a family or friend doesn't mean you don't have to pay it back. I mean, that's a decision between you and that person, but I think you should treat it like any other loan. You want to keep those relationships positive, obviously. You may be able to find an investor who wants to invest money into your business for either owning a portion of your business. I mean, the terms can be can differ widely, but that could be a possibility. Maybe it's taking an equity loan out on your home. You can sell assets to free up cash. People do this all the time. They can sell if you have an extra car, maybe you've got collectibles, whatever that happens to be, to free up some cash to inject into your business. And I'd be remiss if I didn't say apply to our microloan program. Get a hold of Waldo. Our interest rates, these are, we're not a bank, but we can be very flexible, but we want to make good loans too. So we do need financials. Waldo pulls a credit report, and we do have a loan committee that looks at the whole application. If you receive a loan up to $50,000, the interest rate is between 6.5% to 8.75%, and that depends on a lot of variables. I don't know if you want to expand on that, Waldo.
No, if they have more questions, I would just ask that they get a hold of me and we can talk privately on that.
So, oh, did somebody say something? So anyway, I'd like to open up. Oh, I'm sorry. I interrupted somebody.
I think you're fine. Go ahead.
So I'm opening this up for questions. Like I said, it's really hard to go into details for about an hour. I know your time's valuable, but I think in the future we can break down some of these topics and expand those issues. There's a lot of information and things to educate yourself on about credit cards. Hopefully I've answered some of your questions that you may have had as the reason you joined us today. For contact information, and Christine, I don't have you on here, but you can add your phone number and email in the chat and send that out to everybody. So we need to add your name on here. Christine is one of our business counselors for our microloan program. But we have 3 people who can provide counseling services, whether you're an existing business or if you're a startup.
And if you didn't see it, Christine also did a little research on Judy's question concerning the real estate mortgages manual underwriting. Her reply was Dave Ramsey recommends Churchill Mortgage Company for manual underwriting. They are not a Wyoming bank, but manual underwriting is not as common as it used to be. And so this is one source where you could go to look for a mortgage if you're looking at buying a house and don't have a credit score.
Can you still hear me, Walter?
Yes.
Can't advance to the next slide, but basically I just want to tell everybody thank you for attending. You can email any one of us if you would like to inquire on other issues about credit. And I just thank you, and if you want to review this information, it'll be on YouTube probably next week sometime.
Yes. So we do want to thank everybody for joining us today. Our next webinar is scheduled for Thursday, May 10th. Again, it will be from noon to 1, and the topic will be search engine optimization basics. So as you exit the webinar today, please take time to complete the survey. It will launch as soon as you exit out. We do read every survey, and your feedback is important to our program. If you have any additional questions or need further assistance, please feel free to contact any of us at these numbers or email addresses, and we'll be more than happy to assist you. And if for some reason you cannot access the links in Debbie's slides when you go to the YouTube program, you can get in touch with me and I can forward the PowerPoint presentation to you or obtain the link you're looking for and send that to you by email. So thank you all for joining us today. I don't see any other questions. So with that, we will close our presentation and hope you all have a wonderful afternoon and hope to see you again in 2 weeks.
Thank you.